In the next 1 hour, we will be focusing our attention on the question of the future of digital payments and innovation in the era of cyber threats and cyber attacks. And just before I introduce my speakers, I'd just like to point out that perhaps we are at the driver's seat of witnessing this change and the need of innovation at a time like no other. I mean, the COVID situation has necessitated a lot of innovation. And I think for a lot of thinkers and innovators and solution providers who are streaming and joining us now, this is an opportunity where you really have to step out and try your innovation in real time. Especially, for example, when you talk about payments, for example, the world went paperless and they went digital, and everybody's avoiding contact. So it is that point that we really at a space where we get to try our solutions to see if indeed they're offering solutions to humanity. Without much ado, allow me to very quickly introduce our speakers. We will have Mr. Kevin Mutiso, who is the CEO of Alternate Cycle, joining us today. Also, Hussein Ali, who's the co-founder and chief executive of Kipochi. Michael Michie, who's the head of IT at TripleOKLaw. That is a law firm. And I must profusely apologize, we don't have a lady. I have already gotten a lot of backlash online why we have Manel. So that's what they're called. So I'll push this back to the organizers that next time we must have a lady. I've had to apologize so many times. But gentlemen, thank you very much for making time to share your thoughts on this very important conversation. Just a quick house rules is that I'll give each of my speakers about 7 minutes to do a slight presentation, and then I will pick up with a couple of questions for about 20 minutes where we'll get to engage with the speakers, and then we'll open it up with question and answer, and we'll bring this to a landing at 1300 hours at African time. And so we do welcome your questions. Please share your thoughts and let us know what you're thinking. Let's engage and let's have a conversation. Very quickly, let's just jump right into it. I mean, when we talk about the question of payments in the digital space, a lot of things come to mind, but albeit the biggest word that we've had many times has been privacy. Okay, and protection and safety, and these are words that perhaps we've had of in this past decade than any other time. Let me just bring in Mutiso, even as you talk about the question of privacy, security, and competition in the digital age. Are we just competing for the sake of it, or are we putting in place measures that ensure that our users are indeed protected? Kevin Mutiso, welcome.
Bonney, thank you so much. Can everyone hear me? And thank you very much for having me on this panel. Hussein and Michael are good friends. We started in the industry around the same time. Ali obviously was before us, so he's a bit of our older brother. Thank you so much for the question, Bonney. I'll start by introducing myself. I am the CEO and co-founder of Alternative Circle. What we're doing is we're building a super app for entrepreneurs that the entrepreneurs can use to make more money. So it's a tool, and we're currently looking for a banking partner. So if there are any bankers out there, reach out to me directly. We've got some very clever solutions for you to make money during this pandemic. The other hat I wear is I am the director of the Digital Lenders Association of Kenya. There we have come together as over 20 digital lenders now. We lend about 5 billion shillings every month to about 4 million customers monthly. To your question, Bonney, and then I'll start my presentation. Are we competing for competition's sake? I don't think that's the best way to look at it. I think what we need to do as an industry, and I'll speak specifically around digital lending and digital financial services, is to find solutions that solve real problems. One of the key areas of focus, if you look at SDGs, if you look at all the conversations happening around the COVID crisis, the economic response, what has come out very clearly is that there's going to be an economic crisis if you hadn't already feeling it. And I think competition at this point should be reworded to mean co-opetition, because different businesses in the different financial services sector have been solving different problems. And I think we've reached that point where some of these problems have been solved so well, they need to get to the point of scale. And so it's that point where we need to start partnering with each other to scale. When I get into my presentation, when it's my turn, I'm going to speak about the systemic solutions for the digital lending industry is pursuing to de-risk our businesses together, so that we ensure that our sustainability is secured. I hope that answers the question. Thanks for asking.
All right. Thank you, Mutiso. And perhaps just still as your opening remarks, if you could just jump into your presentation, because you've already created a scene setter. Go for it.
Okay, perfect. So I've done a couple of webinars, and I realized that sometimes doing presentations and sharing screens creates technical hitches. So I didn't want to create any of those risks today. So I'm going to walk through what we're thinking. And I'm going to talk to you about digital lending. So digital lending has three main pieces, or three main ingredients. The first ingredient is KYC, so know your customer. The second ingredient is scoring, so risk management, right? How do you determine whether the customer can repay the loan? And then the third ingredient is obviously that movement of value across electronically, and then receiving it when you collect. That obviously presents three very clear vulnerabilities to any system that is going to take part in digital lending. As at Alternative Circle, we've had several attempts of fraud. Some we caught, some we didn't catch. And so I'm going to walk through some of the risks that we faced in those three different verticals. So KYC is know your customer. How do you know your customer? How do you determine that Michael Michie is Michael Michie when he's, you can't see him, you can't touch him, and you don't have his real ID? So, of course, we've come up with very innovative solutions, but the obvious risk there is identity theft. And one of the most common cases of identity theft that used to happen in Kenya, it doesn't happen so much anymore. We've not taken it down to zero, but we've taken it down considerably, was when people would register on digital financial service platforms using real identification numbers and a phone number tied to that identification number, but it wasn't the real person. Right? So you can imagine the kind of even legal issues it creates. Who do you report to? How do you tell the police that it wasn't Michael because that, took the loan and stuff like that? So obviously there you've got a very clear vulnerability when it comes to cybersecurity and, of course, privacy. The second one is when it comes to risk management. I talked about scoring. Right, so this is where you see a little bit more what I'd call investment in the cybercrime. So there's this misconception in cybercrime that it's a young guy sitting in a laptop in a basement somewhere. The reality is a lot of times these guys are very well resourced and are very calculating and very strategic. And one of the ways you can see that is when you see cybercrime that relates to scoring. This is when people reverse engineer algorithms to ensure that they're able to get the maximum loan limits, for example. And usually these kinds of scenarios happen over months. They're testing. They're obviously using vulnerabilities in the identity system, or they've hired people to test using different data sets over time. And then when they figure out how to pay or game your system, they hit you on a Friday night, Saturday night, or Sunday afternoon night. Again, many digital lenders must have gone through this in some way or form, because it's a very orchestrated and well thought out fraud mechanism. And then the final one is less rare now. It was very common in the early days of lending, which is when people manipulate the payment gateway. Something simple as a man in the middle attack. This is not common anymore. A lot of us now have become quite savvy at multi-factor authentication and different other solutions that we use that I can't mention for obvious reasons. So one of the key things that I want to speak about today at this conference is the use of systemic solutions, where an industry comes together to solve one problem, to de-risk the whole play. And at DLAC, we've been working on a system for fraud mechanism. We call it a fraud exchange mechanism. And the idea here was that there were certain challenges we found across the system when it came to determining identity theft, and also catching these very well orchestrated cartels that reverse engineer your algorithm. And the idea was simple. And the idea is simple because we've even tested it now with the membership. We're just waiting for approval from the regulatory framework. The idea is that if somebody hits Shika, for example, and the number, usually they use the same number when they're reverse engineering, and they try to hit Tala, Branch, Zenka, or any one of our other members at the same time, our system, because we're integrated, our system will automatically pick that without telling the other side that this number is using, so following privacy data laws, but telling them that this number has hit 5 or 6 systems in the last 15 seconds, and we flagged it for fraud, and we now recommend that you don't give a loan to this customer, or you don't disburse value to that customer. And initiatives like this, in combination with another tool that is in discussion within the credit information sharing framework that is being spearheaded by the Credit Information Sharing Association, called the Validator tool, will some of the initiatives that an industry can come together to solve a cyber risk issue. I think the future, the benefit of doing that together de-risks the play significantly. One of the big issues we get in digital lending, for example, is that our loans are too expensive. If somebody did the math at the back and understood some of the pricings, the cost of some of the services we have to pay for just to ensure that, we're lending to Ali Kasim and not Michael, who has Ali's ID, is quite expensive when you now take it to that micro level. And if you remember, in digital lending, our average loan sizes are between 1,400 shillings to about 4,500 shillings. In dollars, that's $14 to $45. So even 2 US cents or 20 shillings is a real cost that does affect margin and, does affect how we price our loans. The other thing is, when you align an industry, you can start working on even things of national importance. In Kenya, for example, we tried, I don't know how well it has worked. I guess, I don't know if somebody knows, but we tried the Huduma number. And the idea of the Huduma number was to have the centralized database of a citizens' data where they could access different data sets, such as their housing, National Housing Insurance Fund, the Social Security Fund, the Credit Reference Bureau, your ID, your driving license. What we've done at DLAC, for example, is we've built this system thinking 20, 30 years into the future, and using models that have already worked in other markets. And so our system is designed so that in the future, if we ever need to plug into an identity wallet system, which in my opinion will be the future of identity, what we call PII, personal identification information, the structure for that. We will be able to have identity wallets where Kevin Mutiso can have access to all his different data sets, but no one party can access that data set without Kevin Mutiso consenting to it first. This is working very well in countries like Estonia. It's going to be tested really soon in Australia. It's working pretty well in Singapore. And so my presentation today was to sort of get people to start framing their minds to how do we solve problems of cybersecurity as an industry so that we de-risk the commercial elements and then also align some of the national objectives of the government to help them also achieve some of their goals. That's it from me, Bonney.
Right. Thank you. Thank you very much, Kevin, for setting the scene so wonderfully. Also, thank you for highlighting some of the innovative solutions that your organization is coming up with. Quite a few things that I picked up that I'll want to revisit later on in the conversation. The question of the cost of safety, and is it a deterrent for solution providers like yourselves? Also, or I'd like to talk a little bit more about the future of identity. But for now, let me bring in Ali Hussein. Like you said, Ali has had quite a bit of time playing in the tech space and solutions provision space, especially in the digital payment systems. And Ali, even as you make your opening statements, I'd like you to perhaps respond to the question of, do you think the advent of open banking has created a lot more cyber threats than they were before? And as solution providers, are we prepared to mitigate against that? Ali.
Bonney, thank you so much. First, I just want to confirm that you guys can hear me clearly.
Yes, we can.
Yes, we can.
Great.
Ali.
So I have a presentation to make. Allow me to take everyone through my presentation. Am I supposed to operate this, or is this gonna be operated remotely?
The Internet of Things.
The Internet of Things. Next slide. So let me just maybe quickly start by introducing myself and my company. Ali Hussein. I have been in the tech space for quite a number of years, as Kevin has probably intimated. Probably when Michael was still in high school. Hi, Michael. I've been in the tech space for a while. I wear a number of hats, but in this particular conversation today, my hat is Kipochi hat. So Kipochi is really a digital banking ecosystem that we have more or less almost completed building, and our big, hairy, audacious goal is basically to bring all the players in the financial services ecosystem into the digital age. So when I say all the players, I really mean mostly the players who haven't started playing in this space the way they should. So to give you an example, last year the SACCO and microfinance and group space in the financial services sector in Kenya saved more than $766 billion. Sorry, 766 billion shillings. But most of this money goes straight into the financial services, the formal financial services ecosystem. There's a lot that can be done within the SACCO space, within the MFI space, for them to derive more value out of that. So Kipochi is about empowering this ecosystem. So in a nutshell, that's me. So So today I'm going to answer the conversation about open banking and fintech in Africa and how prepared we are as far as cyber attacks is concerned. But I would maybe start by not making an assumption that everybody understands and knows what fintech is all about. So let me just quickly give you a quick background. When we talk about fintech, we talk about lending, what my brother Kevin has just talked about. And when we talk about lending, we talk about marketplace lending on alternative underwriting platforms, which is a space that Kevin plays in. We talk about blockchain and cryptocurrencies, companies that are leveraging blockchain technologies for financial services, and maybe spend maybe 1 or 2 minutes when within the blockchain and cryptocurrency space. We've heard so much about this space. We have heard how bad players can use blockchain and can use crypto, to money launder and all sorts of things. But what's also interesting in the last few months is that we have had a lot of established players wanting to step into the blockchain and crypto space. So I'm not going to spend much time about this, but if you Google the central bankers worldwide who are now saying they are launching their digital currencies and so on and forth, so for that is being sort of driven by the blockchain and crypto conversation. Then we have RegTech, that's audit risk and regulatory compliance software that can also include the conversation around KYC, KYB. So KYC is know your customer, KYB is know your business. Then there's personal finance with the tellers, the branches, the M-Shuaries, the carbons of Nigeria are sort of, playing in. Then we have payments and billing. So in its lowest form, payment is about M-Pesa, sending money to each other, paying Lipa na M-Pesa and stuff like that. Then there's insurance. Now, insurance in Africa has the lowest penetration rate worldwide. In fact, the highest is in South Africa, which is about 13 to 14%, if I'm wrong. If you come to my home country, Kenya, you have less than 3% penetration rate. The question is why? And can InsurTech meet the dream of getting everybody insured just from a personal level and as far as their business is concerned? Then we have capital markets, that's trading in the capital markets regarding not just instruments of finance, but shares and stuff like that. We then have wealth management. This is managing your wealth on a one-to-one basis. Then we have money transfer and remittances. Now, let me spend 2-3 minutes on remittances because this is very critical for the African continent. Globally, remittances, we are seeing last year more than 500 billion shillings was sent between different country corridors, from the US to Asia, from the US to Africa, from from Europe to Africa, and so on and so forth. 500 billion. Now, international money transfer is probably one of the most critical influx of money for some of the most vulnerable countries in the world. And yet, cost of money transfer is absolutely crazy. You're talking about an average of 10% every year, 10% of the cost of the total money sent. So can fintech reduce this cost and expand this service? I leave that point for another day to discuss. Then, of course, there's real estate and mortgage. So this covers the whole fintech ecosystem. So let me reiterate, fintech is not just about lending. Yeah, so when you hear people keep on harping mobile money lenders is fintech, it's just one component of it, and I dare say a small component of it. So let me then talk about what open banking is. And open banking is very, very critical going forward. It basically enables the creation of plug-and-play fintech APIs. APIs are just connectors between different softwares. These APIs enable third-party developers, and in this particular case, most critically for some of us, is that enablement between banks and fintechs to provide services around data and financial institutions. So before open banking, you had a consumer's financial data that is centrally held by one bank. After open banking, and the best place to discuss open banking would really be Europe. Europe is way ahead of everybody else when it comes to open banking. Regulators, policymakers, players in the industry, they are all on the same page. And that's the nirvana we want to achieve across Africa. After, you're talking about all consumer financial data is callable via a single API, which basically means I can take my data today and move it from bank A to bank C and actually hawk my data and say, hey guys, I need a loan. What is your cost for a loan? No, I don't like your cost, and I can do this on the fly. I don't like that cost. I will go to bank B, or I'll go to bank C. And the same happens to sort of all other financial instruments as we are talking about. So this is the promise of open banking. And yet we have a situation where we have the whole conversation around privacy, around security and all that. So how do we mesh the promise of open banking while at the same time ensuring that we are protecting people's data? So we'll have that conversation as we move along. As governments and financial institutions collaborate, obviously there are concerns around data privacy and compliance that are becoming a big issue, and especially because of the situation a year back between Facebook and the issue of privacy and the role that the company called Cambridge Analytica played. So in Europe, you have GDPR. In California, they have a Consumer Privacy Act. In Kenya, we have our new Data Privacy Act, which became which is now becoming a big issue. So if we take the issue around Kenya, after a long wait, we now have a comprehensive data protection legislation, the Data Protection Act of 2019, which was assented to by the President of Kenya on 8th November 2019. The Act brings into play comprehensive laws that protect the personal information of individuals. Now, how do we mesh this? Deep feeling for privacy and open banking. That is a conversation that can only start when we start discussing the risks that are all over the place when it comes to digital. And we're talking about social and phishing. So social engineering, somebody will call you, and we've seen this a lot in Kenya. Someone is calling you, trying to intelligently try and get some information from you, or looking at your social media engagements and trying to engineer your emails, your email passwords, your internet passwords, and so on and so forth. We have malware and zero-day botnets, which target endpoint systems at the corporate level. We have passwords and configurations, which target, again, endpoint systems. Purpose, obviously, is to initial penetration, expansion of reach, and escalation of privileges. So you get, when you're talking about privileges, for example, when you talk about corporate banking, you have certain privileges that can be escalated by people getting access to your passwords and configurations. Then we have distributed denial of service, which is one of the most often used. Network and application infrastructure are usually the targets, and the purpose is usually to cause operational disruption, create diversion for other attacks. Then you have a smart and mobile hacking. We are seeing this more and more as across Africa, the first time people get online is through mobility. And more often than not, you'll find that these people never actually use desktop applications. They are all on mobile. Last but not least, you have database server SQL injections that get people to obtain accounts and user credentials and steal sensitive data. There's a whole black market out there of people actually trading people's information. Now you ask yourself, why would a hacker want my information? But think about in countries in Europe and in the US where automation of financial services has become the norm. If you have 10,000 accounts with people's dates, birth dates, and next of kins and stuff like that, and you can automatically apply for mortgages. So you now start translating that into somebody is applying for a mortgage for you and you have no clue. Somebody has taken a mortgage of, say, $50,000 and you have zero clue. And then you multiply that by 10,000 accounts. And these things are done by bots, by robots and software and stuff like that. So you can start seeing the opportunities and the threats. Now, the question is, are we prepared in Africa? Are we really prepared? So cybercrime threats remains pervasive across Africa. Now, one of the biggest problems that we have, and Kevin alluded to it, is that we don't share information. So even as I'm showing you these figures, they are probably double because this is information that has been shared. So look at insider threat. That's one of the biggest so-called dirty little secrets when it comes to cybercrime. Most of cybercrime is insider instigated. So look at that number. Insider threat, $352 million. Attack on computer systems from outside, $295 million. Identity theft, 166. That's what I just talked about. Email spam, 108. Data exfiltration, 75. Online fraud, scams. Now, this is data available up to 2017. Can you imagine now what's happening? What happened in 2018? What happened in 2019? And so on. Are we ready? I think the answer to that is your guess is as good as mine. Cybercrime costs Africa's economies billions of dollars. Look at Nigeria, $649 million. Look at Kenya, $210 million. Look at Tanzania, 99. Look at Uganda, 67, and Ghana, 54. Now, can our economies afford this sort of losses? And what can we do to actually address this? And we're talking about financial services. Now, if you look at this interesting ranking of countries with fear of cybercrime in Africa, the source is World Bank. Again, Nigeria has the unavailable #1 slot. South Africa, Botswana, Kenya, Rwanda, Mauritius. Now, this is quite interesting. If you look at the most advanced countries in Africa when it comes to fintech and thinking around open banking, you have the usual suspects. You have Kenya, you have South Africa, you have Nigeria. And I'm just saying that as we develop further as economies, we also develop subsequent risks around the same issues that are advancing us further. it's the same thing. People used to say Microsoft Office is the most vulnerable. I don't think that was the issue. The issue was most people were on Microsoft Office. So obviously you have more people trying to take advantage of vulnerabilities in Microsoft Office as opposed to Apple. So today you have more people on Android phones, so you have a lot more risk on Android phones. It's really as simple as that. Bonney, I can go on and on. This is
I know.
a subject that I'm super
you're
passionate
right
about. Yeah, so
I know you're right at home with this conversation.
So I will end there and allow my brother Michael to come in. But I'm happy to take questions as we move along. I'm also happy to engage with everybody else after this conversation on my different social media channels. Bonney, thank you so much. Appreciate it.
Thank you, Ali. Obviously, interesting points you've made there, and we'll be revisiting them shortly. The one thing that stuck to me is when you look at when you compare, for example, the African fintech space and Europe. Are there lessons that we can learn from the European space of things that we should not repeat? And we'll be getting to that shortly. But talking about crimes and deterring them, let's bring in the law. There has been the church and state relationship when you talk about relationship between innovation and legislation. And this is always in regard to innovation that is moving faster than legislation. As we bring in Michael, as you make your opening remarks, perhaps are you happy with the sort of jurisprudence already experienced or set up in African markets as far as dealing with cybercrime? And what do you see as the biggest threats and opportunities when we are crafting laws to curb cybercrime? Michael.
Hi, Bonney. Good afternoon.
Good afternoon. Yes, we can hear you clearly.
All right. So just to kick off, specifically with Africa, one thing you notice with our legislation within cybercrime is attempt to maintain the status quo. So we try to pick up what was previously, let's say, a physical way of investigating and all these other processes, and then try to digitize them. Now, there are a lot of legislations which we have in terms of just how strong they are, how explicit they are in terms of what they're trying to communicate. So we end up coming up with very broad and vague legislation. Just rescue how we have about 39 countries which have legislation that translates to 70%. A further 2 countries with draft legislations, and then 12 other countries with no legislation. And there is then 1 country where there's been no data regarding whether it has legislation or not.
Mm-hmm.
So, and if you compare all those legislations, you obviously come to notice they all almost look the same. It's always good to borrow from best practices, but again, it needs to be adapted to your current situation and where you are as a country. So some of the challenges that have been faced with legislation across Africa, one is it's quite hard to adopt this legislation just in terms of practice. So
Michael, we're having a bit of challenges getting you. I guess the network is dropping. Can you hear me, Michael? So we're having a bit of challenges. I guess the internet is dropping, so we missed a little bit of what
normally find is there's an interchange between terms like data and information, computer access, regarding is difficult from terrorism. lot of legislation really tries to achieve localization of its data, especially data regarding its
Okay, so
seasons.
Michael, let me just bring in Kevin as we try to sort out your connectivity. We missed the last bits of what you're saying, and we'll get back to that because that's obviously very important for this. Kevin, there's a lot of conversation about the laws and standards that are set up globally. So Ali talked about the GDPRs and the data protection laws of Kenya, and all these things are coming out. And earlier on, you mentioned the cost of safety in terms of speaking as a solutions provider. I'd like to hear your thoughts on how one are solution providers happy with the sort of laws and regulations or legislations that are meant to protect the users, especially I know you operate in Kenya. So in respect to, say, a law like the Kenya Data Protection Act of 2019, what are your thoughts as a solution provider, and also like to hear Ali's thoughts on the same, Kevin?
Yes, that's a very good question. I think the laws have the right spirit. So the spirit of the law, as they say in legalese, it's right. So how do we protect the consumer? How do we ensure the consumer's rights are protected? And then how do we ensure that the products being sold by the businesses are kosher or are going to positively impact the consumer? I think that's usually the spirit of the law. So to ask, are we on board as solutions providers? I think the answer is a resounding yes. I can speak for myself and the industry. As DLAC, I think the Privacy Data Act is at par with some of the really good laws that we have in the US, Europe, and in Singapore, we have PDPA. The way the law was enacted as well was a consultative approach, and so because the Constitution allows for that consultative approach, Kenya got our new Constitution 2010, which ensured and enshrined that consultative approach to things. Now, what we wish and we hope is that spirit is carried forward when it comes to other laws, be it in fintech, digital lending, wallet, mobile money, remittances. I think a consultative approach within this African context will create significant advantages for us as Kenyans and as Africans. And that's simply because if the COVID pandemic has decimated the European economies, the Asian economies, and if there was ever a time that we could use some tools to our advantage, I think now would be the best time. I hope I've answered your question. The other question is around cost of safety. Cost of safety. That's a uniquely Kenyan issue, uniquely African issue. If you remember, our GDP per capita is $1,700. That's 170,000 shillings per person in Kenya. When you compare that to the US, which has a $60,000 per capita income, which is 6 million shillings, you can imagine that when a solution is being priced for us, with our type of products in mind, the cost is significantly higher, even if it's cents on the dollar. And so I alluded to it earlier, where we lend $14 to $40, $1,400, 4,000 shillings on average, and our M-Pesa cost, is anything between 16 to 21 shillings per disbursement. And a lot of our customers do take loans below 1,000 shillings. So when you do 21, or let's just round it up 20/5, that's a significant cost. But if your average loan size is 100,000 shillings, what is 20 shillings?
Right. Fantastic. Ali, I'd asked you that question, but before I come to you, let me just bring back Michael, because I see his connection is back. And Michael, the question that I'd put to the two gentlemen was, as providers, are they happy with the regulative space And perhaps specifically to you, what do you see as the relationship between solution providers and the law, you sitting on the side of the law, and how can we improve this relationship? Okay, I think we have a slight connection. We'll get back to you, Michael. Don't give up. Ali, same question to you that I'd put to Kevin. As a solution provider, are you happy with the current setup? And also, how do we improve this relationship? Whether you look at it from a compliance point of view or customer protection.
So for me, I think it's a mix. It's a mixed package. It's a mixed basket. To say, I think the privacy law, the Privacy Act, is great for open banking because it allows people to be a lot more freer in sharing information, in information portability. But I think we have a lot of education to do to inform our customers and the general public at large what the Privacy Act means, what it means for them from a service delivery perspective. So I think that's great. And let me give you an analogy when it comes to policy and regulation.
Right.
If you are at a restaurant having lunch or dinner or breakfast, there are a number of things that you are a player in that restaurant. You are either sitting at the table having that lunch, breakfast, or dinner, or you are serving, as a waiter, or you're on the menu. You don't want to be on the menu.
Right.
So you better engage with policymakers and regulators. And as Africans and as Kenyans, we need to stop being afraid of engaging with policymakers and regulators. Let me just say one thing, what my dad used to tell me, he still tells me, they are civil servants. Let me repeat, they are civil servants. They are supposed to serve us, not the other way around. Let us not be afraid. Let us not be afraid of this, muheshimiwa kind of thing. Let us give them the respect they deserve because they are leaders, but let us engage them. We, as business people, the onus is on us to engage with regulators and policymakers. And it is important that you actually have the right policies. So ultimately, it is upon us. It is not upon, it is upon us to make sure that we have the right regulations. So for me, it's a mixed bag. I think policymakers and regulators and business people need to do a lot more to engage and get the right policies and the right regulations for their countries.
Ali, Kevin, there's already quite a number of questions that are coming in. During Ali's presentation, it emerged that insider threat was perhaps one of the biggest that we are facing in this part of the world. And now that people are working remotely, so the first question is, do you see an increase of this as a result of remote working occasioned by COVID-19? And two, as a solution provider, how do we handle this?
Okay, that's a fantastic question. Insider threats have always been a large issue, and so the challenge we've had when we are thinking through remote working is a lot of security features were supposed to happen within a network. And so now how do we solve that now that we're sort of working in different networks? I think Michael would be better placed to answer the technical elements of that. What I could potentially say is cybersecurity is not always a technical solution. Sometimes it's a combination of technical, soft, and then having a manual process inbuilt into the solution. So anything that has to do with the movement and disbursement of e-value, for example, we have some very clear guidelines because one of the presenters earlier had called up break the glass solution. We call it a kill switch. And there's certain people in an institution that has that kill switch, and they can switch off the system remotely. So we had already created those kinds of solutions. On things like reverse engineering, identity theft, those we were already doing that. Remote. I mean, those are things that were being managed with the remoteness in mind, right? So the one risk that that internal threat that you've talked about has to be managed with ensuring who has what access when, and managing that access, and then of course creating certain manual processes that deter that. And then there's a famous one I've been in lending for a long time, is just don't create temptation. So take temptation away from whoever who could have it in the system or in the organization.
Right. As I bring in Ali to respond to this, let me just confirm if Michael, you can hear us okay, and is your mic on? Ali, as Michael confirms that, I've just seen somebody, Shamiel Biha, who says, how about starting with removing the old VPN technology in regards to working remotely? I wonder your thoughts on that as you answer my earlier question.
Look, I think most organizations in Africa, with all due respect, have not really taken cybersecurity as seriously as they should. And we can even start at the board level. I sit on several boards, and I can tell you that up until money is removed from your pocket physically, you don't see the threat. You're not sort of relating loss of data and loss of sensitive information, because you're not seeing actual losses from a cash perspective. This is sort of incongruent to financial services, because that's direct. They can see the impact immediately. So we, as practitioners in the technology space, need to more and more talk about this threat when it comes to intellectual property, when it comes to just threat of personal data being stolen, and extrapolate how that can actually affect organizations. A lot of the other stuff my brother Kevin has actually talked about, so I don't need to repeat myself. But I think the most important thing for us to talk about and to emphasize is awareness. At the topmost levels of organization, at business owner awareness, at board level awareness, and bring on board your cybersecurity experts. Even if you don't have one in-house, get one, outsource one. The Central Bank of Kenya a few years back did something great. They insisted that financial services players must have cybersecurity policies in place and must have chief information officers, chief security officers in place. Those are the great conversations and the great initiatives and interventions that are required across the continent.
Right. Michael, I know it's been really frustrating on your end, but I'm sure we have you back now. There's quite a few things you need to comment on. So we obviously talked about the relationship between service solutions providers and the law. And I wanted to look from your end, how do you see this relationship and how can it be improved? But also we touched on the issue of insider threats as a big issue as far as cybersecurity is. If you could touch on those issues.
So in regards to the relationship between the stakeholders and the policymakers, I think not enough is being done. A good example is the Data Protection Act. I don't think enough stakeholders got involved, especially if you look at those within the marketing space who practice a lot of, for example, data scraping. This is completely oblivious within the Act, and it was also oblivious within GDPR, which is what we heavily borrowed from. And so we end up repeating the same mistakes that other countries which we are borrowing the legislation from are also making. So I think also on the awareness of the stakeholders, and also they think they do require a lot of awareness to be brought out to them in regards to this law is coming. It may impact you. Just have a look at the draft, because I don't think those within marketing thought of it as a big deal until now, when you realize how big of a deal this law affects those who do data scraping is. And those are, of course, jobs which are at risk. Is it illegal? It's quite in a gray area.
Right.
Secondly, your question on the awareness, sorry, on the insider threats. I think that will always remain the big challenge. And right now, you multiply it by, I guess, any factor you want, whether it's 10, 5, 100, because right now we've all gone home to work remotely. And when you get home, you sort of tend to relax. Psychologically, your mind is at ease and you feel a sense of security. And that shows in any aspect of your life. For me, I've not been combing my hair. I'm in a t-shirt because I feel quite comfortable at home. Again, that translates to how I work. Probably
I hope your boss is not watching.
No, we've already discussed that. Yeah, so
Okay.
again, that translates to then the people who you work with, and then you find people now at home treat their office devices, if they've gone home with any office device, as a personal device. Again, your Wi-Fi is at home probably are not secured, so the default credentials for your routers are still the same. You may, of course, your SSID may be password protected. You probably have a strong password, but the router itself can be easily compromised, because straight from the manufacturer to your service provider, there are no patches done. There was little done to improve the security. So that then also drives up the possibility that the insider threats now should, of course, increase.
Right.
And of course, we've also seen with Zoom and all these other platforms where we're having meetings, webinars, communication has grown extensively. This means it's quite a lot easier for you to now social engineer people from home with news about webinars, COVID-19, and the IT guy isn't now a phone call away from his extension. You have to try and reach him. He could be out of the house. So the awareness and training that needs to be done to insiders just to reduce that risk is quite high. Again, from home, you'll notice some people have opted to start using their personal drives as opposed to their office drives. But that's Google, iCloud, all those. So the insider threats are quite significant.
Right. As we bring this to a landing, I just want to give you a few more questions, Michael. There's a question from Norbert Kitavi Mutinda, who's asking, how do we ensure that all firms, other than just financial institutions, actually enforce the compliance, how do you enforce compliance of the Data Protection Act of 2019 for non-financial institutions? Well, I think this is in regard to open banking.
Okay. So financial institutions would say, you could say, have the slight luxury of having a regulator who has pushed such initiatives as Ali has mentioned, such as having the security policies and the cybersecurity experts in place. Other industries probably are not as aggressive, so probably it would have to be an issue of the stakeholders and as government to push them towards that. Again, additionally, they just need to have the right people in place to guide them through this.
Right.
Can I add on to that?
Yes, Ali. Go for it.
So Kenya is currently in the process of hiring a data commissioner. So this data commissioner is all encompassing. So it's gonna look at all industries. So we are hoping that different industries will work with him or her to ensure that interpretation of the law is done the right way to protect customers and Kenyans, as opposed to bring down businesses.
Mm-hmm.
This is the biggest problem we have in African countries. It's about the big stick, not about an enabling environment. A regulator is supposed to not just unleash the big stick. A regulator is also there to enable the industry that it is regulating, to ensure that that industry grows. To Michael's point about not enough being done, I want to challenge business owners. You must engage with government. You don't sit back as the Marketing Society of Kenya or the profession or the HR Society of Kenya and wait until laws are being put together and then start running helter-skelter. We don't like this, we don't like that. No, engage, have a seat at the table, or you will be in the menu.
You'll be part of the menu. And I think that's a quotable quote, must quote for 2020. A few more comments coming in, gentlemen. Maudor says, most of policies don't even understand, let alone implementation of those policies. Also, we have Chukwuemeka Nzei, who says, in combating cybercrime across Africa, we need to try and address cross-criminality issues. There must be a concerted effort to harmonize how to deal with cyber crimes across Africa or sub-regional countries. Then there is also Nayoka, who says there's also an issue of trust between what is being regulated and the ordinary people. Gentlemen, as we come to a landing, I'd like if you could give 3 low-hanging fruits that both African regulators, lawmakers, enforcers, solutions providers can grab in terms of ensuring that the space of digital payment is safer going forward. Let's start with Michael, Ali, and then we finish with Kevin. This would be your closing remarks.
Thank you, Bonney. So one of the first low-hanging fruits I think that needs to be addressed is redefinition of certain words, which I think are causing more harm than good. One is KYC, and 2 is regulation. As Ali mentioned, regulators are not there to stop. They shouldn't be there to stop things from happening. They should be there to enable things. And the concept that we've come across with the regulators is to maintain a status quo, and that harms development and innovation. The second word is KYC. KYC, as know your customer, needs to be translated better, because it was there as a physical form of knowing your customer. Right now, you can know someone from their digital footprint without even knowing who they are, but have enough accurate data. So KYC needs to be translated to allow for a new form of digital identity. Thirdly, I guess, is now the disruptor as a definition. I guess also we also fall victim to that when we say digital disruption. Probably it has a bad ring to the regulator's ear, where it sounds like you're trying to burn down the house. So probably just dealing with those 3 keywords would be the first step. Secondly, would be more awareness. There's not enough awareness in regards to the digital space within financial services, and we've seen from Ali's presentation, he's really done a good job with InsurTech and other forms of RegTech and all those, which all play a part in FinTech. So FinTech isn't just what Kevin and the Digital Lenders Association do, and that kind of awareness needs to be publicly done by the bodies responsible, for example, the Digital Lenders Association and other groups out there, because a lack of knowledge really harms the growth of any industry. So that needs to be catered to. In regards to securing the platforms, I think we need to avoid copy-pasting what we are seeing in the Western world, because we already have mobile money here in Kenya and in Africa where it's booming, but it's not booming elsewhere. So don't take legislation that would hinder such a practice and bring it here. For example, the Data Protection Act would hinder the M-Pesa agent from collecting your phone number on a book and your ID number. but we just copy pasted something from GDPR and we didn't think about its practical application within our country. Thank you.
Thank you very much, Michael. Ali, take us home with what are the low-hanging fruits, and then Kevin will close for us.
Before I do my low-hanging fruits, I just want to sort of continue into what Michael had said. I mean, Michael, surely, why would M-Pesa up to now still have those booklets collecting numbers from customers? Surely, I mean, with all due respect to everyone in that ecosystem. This is 2020. Why are we collecting in physical books? And they have all our data in the... So anyway, I can go on and on
Please,
those conversations.
Let
Let me just pick the important. I want to start with policy and regulation. And in this case, let's pick from Europe what Europe has done on the PSD2. This is the Payment Services Directive 2, which this is the regulator and the policy maker enforcing data sharing between the financial services ecosystem from the traditional players to the fintechs and other data players and other players within the financial services ecosystem using APIs. Why has that been so successful? Because they had the right thinking and the right infrastructure based on GDPR ethos, data privacy, data protection. All right, that's a brilliant thing that we can use tech and actually improve on. For crying out loud, Kenya is the epicenter of mobile innovation. Do we want to lose our edge? Do we want to lose our edge as people are moving forward? I think that's a great opportunity to take this to the next level. Number two is the issue again about regulation, but from the side of industry. All I can say is 3 words: engage, engage, and engage. It is your right. You're paying taxes. These are civil servants working for us, not the other way around, guys. All right?
Okay.
I cannot emphasize that further. The third and last one is to emphasize what Michael has said on another way. KYC from the industry side now, but not from the regulator side. Guys, we have forgotten what KYC means, and we have thought about it as a regulatory imperative. Let's turn it into a strategic imperative. Know your customer, guys. You are mteja wako. If you know your customer, you are better off, providing your customer with better services. I mean, what better way can we as an industry? Thank you so much, Bonney.
Right, we're out of time, but Kevin, as you take us home very quickly, your low-hanging fruits. Also, there was a question of why are digital lenders shaming loanees. If you could try all that in under 1 minute, that would be great.
I love that question of digital lenders shaming. So I'd like to make it very clear, categorical even, that if there is a digital lender who shames, they are not part of the Digital Lending Association of Kenya. We have made it very clear publicly. Last week we had a press release even calling out certain players that we feel have been highlighted by the regulator. And so I want to be very clear. If you're borrowing from somebody, a digital lender who shames you, that is not a digital lender. Those are not our members. We follow a code of conduct. We're engaging as Ali with the regulator. So we're the good guys.
Okay, your low-hanging fruits.
Yes. So This is difficult because you've put me after both Michael and Ali, who are, very intelligent and have been in the industry for long. So I don't know what else to add. I think I will reiterate some of their comments. One, Ali has basically told us, rethink KYC. Michael has said rethink KYC. I'm saying corporate, regulator, and industry, let's grow a pair of balls and do the right thing, right? I think it is de-risking it. We de-risk the game for everyone when we align together. The other thing is working with industry. We talked about, Ali reiterate, both Ali and Michael said, engage with government. Government is works for us. I think I want to agree and add that government also is run by people like you and me who are trying to solve very unique problems. And when engaging with government, we need to be clear that we are not going there to fight them. We are going there to partner. We're going there to align because they also need to solve certain things. And in digital, in countries like Kenya, we can even help them boost their revenue and collect taxes better. I'm still in shock. Ali has talked about one service, Safaricom still not with the books, M-Pesa having the books. I'm asking, why doesn't KRA have an API that allows us to feed data and collect data on, as we already do that as VAT. We collect tax on behalf of KRA as VAT. Why can't we do that on digital platforms? Why are we always fighting? Right. I think the final thing is when it comes to low-hanging fruit around cyber threats, and no one spoke about this, is let's start with ourselves. What are our value systems? What have we decided that, what we want our companies to be, our country to be, our industry to be like? And so if we're engaging in, how can cyber threats, internal cyber threats be the largest contributor to cybercrime? We need to look in the mirror and ask ourselves, are we the country or are we the people that are going to lead our children so that they can do the thing in their time? So those are my 3 cents.
Right, gentlemen, thank you very much for your contributions. Apologies to the organizers and everybody listening for overshooting the time. But thank you very much for sharing your thoughts and some of the challenges and opportunities. And this conversation certainly will end now, but it carries on online. So please use the hashtag Let's Keep Talking. All these gentlemen will be online to answer any of your questions. But thank you very much to Kevin Mutiso, Ali Hussein, Michael Michie for sharing your thoughts and making time in this conversation. Asante sana and have a great day.
Thank you, Bonney. It was our pleasure. Thank you so much.
Thank you.